background. To create a trusted global organization with a sustainable future is a vision of KIT, while its goal is to deliver secure, responsible, and profitable solutions for sustainable urbanization. Keppel Infrastructure Trust provides sustainable urbanization strategies with an emphasis on four main areas: energy and climate, urban growth, connectivity, and asset management.
Company information. Full company name Keppel Infrastructure Trust, stock name KEPL, stock code SGXA7RU, stock market small cap, and share price 0.54.
Next is for the business model. The Keppel infrastructure is considered have two business models, that is B2B and B2C. It is B2B because it engages with other businesses, and it considered B2C because it provides utilities such as electricity to their customers. Next, we move to the industry analysis, where we can see the comparison between the utility sector in the Singapore and our company Keppel Infrastructure. First, for the current ratio, it showed that it was decreased from 2010 to 2019, that is from 2.49 to 0.6 respectively. A decline in this ratio can be attributed to an increase in short-term debt, a decrease in current asset, or a combination of both. For the total debt total asset ratios, it showed a fluctuated over 10 years. It slightly decreased in the latest year, that is in 2019, from 39.60 in the previous year to 31.72 in 2019. For the total debt and common equity, we can see that the industry sector do not show much difference from year by year, which it remains in between 130 to 101. For ROE graph, we can see that the graph is fluctuated in 10 years. A rising ROE suggests that a company is increasing its profit generating without needing as much capital. Higher ROE is usually better. Falling ROE may indicate a less efficient usage of equity capital. For the net profit margin, we can see that industry sector fall drastically from 2017 to 2019, which show that most of the company in the utility sector making less money compared to their spending. For the earning per share graph, it shows a fluctuated in 9 years and remain constant in year 2019. In year 2010, the industry have a higher EPS, that is 0.12, while in 2015, the earning per share fall to 0.05. Dividend yield. Both company and industry have the same fluctuated graph over 10 years. For industry, the higher dividend yield is in 2011, that is 4.058. Too high dividend yields can indicate the payout is unsustainable. For PER, both Keppel and industry has high ratio in year 6 compared to other 10 years. For industry, in year 6, the PER is 267. It could be assumed that the company stock in that year is overvalued. In the utilities industry sector, in year 2018 was the higher total asset turnover compared to other 10 years, that is 0.7071. The higher total asset turnover means that the more efficient its company is at generating revenue from its asset. Last but not least, for DuPont analysis, it showed that in 2017 to 2018, it fell drastically from 6.16 to negative 189.439.
Current ratio increase over 3 years, decreased from 2015 to 2016, and this graph is fluctuated. Debt to asset fall from 2014 to 2015, slightly increased starting 2016 until 2019, and this graph is fluctuated. Debt to equity. The graph suddenly declined from 2014 to 2015 and gradually increased starting 2016 until 2019.
Dividend yield. This graph is fluctuated.
Earning per share. The graph is fluctuated and constant over 4 years. Return on equity decreased starting 2010 until 2012, suddenly increased from 2012 to 2013, and this graph is fluctuated. Net profit margin increased from 2011 to 2012, decreased starting 2018 to 2019. This graph is fluctuated. Total asset turnover increased over 5 years starting 2010, but it decreased from 2014 to 2015. This graph is fluctuated. Price-earning ratio increased from 2014 to 2015 and suddenly decreased in 2016. DuPont analysis sharply increased from 2011 to 2012, and this graph is fluctuated.
Okay, next, this is a total return for KIT versus industry. KIT total return for 10 years was volatile, but eventually it shows a good sign. However, we have to do a stock valuation to see the stock is worth to buy or worth to sell. Okay, why stock valuation is important? Valuation is a process which investor determines the worth of a share for further investment decision making between the trade-off risk and return. We analyze the valuation of this company based on series of dividend distributor. It means the more positive dividend distributor, the valuation will be higher and the investment will be more favorable for the shareholders. To determine KIT investment or intrinsic value, we have used the first model, which is dividend valuation model, and our assumption is the company will pay the dividend at infinity term and constant over period. And we also use constant growth formula to get a value. This is the data set for KIT in 2019. The growth is 0.65%. The current year dividend is 4% and the required rate of return is 10.57%. The intrinsic value for KIT is $0.41, while the market price is $0.55. It shows that the intrinsic value is lesser than market price, and the difference of value is $0.14. In this case, it shows that the stock is considered overvalued, and the decision of the valuation of the stock is we will sell this stock because it is clearly shows that it is not worth to buy. Meanwhile, the investors relying on fundamental analysis will exit from it.